Well, good morning, everyone. Welcome to our Tuesday morning trading room. Oop, hold on a second here. Got to get the screen share going on. I hope everyone had an enjoyable long weekend. I know I did. um, Almost got nothing done, but I suppose that's the point of a long weekend, isn't it? All right, so the market off now to a little bit of a soft start. Hold on here a second. We'll take a look at the daily. This is the daily chart now for the NASDAQ. It's not a bad idea to take a look at a broader perspective. A daily chart is great, hourly chart, fine. You can even ramp up the values on your mean Renkos. I think it's helpful to have kind of the broader perspective. See where you've been, see where you're going. And it looks like we've made our way up here to the 7100 zone, where we've been anticipating the market to maybe find a little bit of resistance. Volume is up, even though the bars are relatively small. And we've been making this very tight little sideways trading range. Market more or less in this trading channel. So I think 7100 is going to be a real obstacle for us to try to get above. And we're seeing a little bit of bullishness come into the market here this morning. Got a first micro macro cross right out of the gate. Don't have our first in sync eagle signal just yet. This is a signal that we tend to look for early on in the day, the market just opening, but our band is bearish, so we would ideally be looking for a sell signal, but now the band a little bit more neutral, maybe even turning over, becoming a little bit more bullish. The Hawk band already turned, or pardon me, the Raptor band already turned over and becoming a little bit more bullish. The Falcon here with the first micro macro cross to buy. And that certainly seems to have found its profit objective for the most part. We haven't really moved all that far off of the 70, 50, 70, 40 zone that's held the market up for the last little while. Still early though, we're only, what are we, about 5 minutes into the day. I'm going to try to avoid doing anything stupid. All right, well, the buyers certainly continuing to push higher. All right, there were a couple opportunities here. Again, I'm not really looking to get, busy too early. All right, a little bit of a pullback now. If we considered this range down here to be a sideways trading range, small as it was, this would now be the breakout. And we would be looking for a retest. So we'll see whether or not we get that. We definitely have some bullishness going on here this morning, at least out of the open. I'm surprised at the soft start to the day. You would expect after 3 days off, the markets would be a lot busier. I need to see a couple of bars lower here. I think we're going to actually get our number 2 signal. All right. It's not ideal, but you know what? If you wanted, you could look at a quick little short here. Come on, are you going to get up there a little bit? All right, I'll try to short it from here. Essentially, the number 2 signal, the target being the hard edge. What time is it? Oh, goody, we're almost at the quarter to the hour mark. My least favorite time of the day to trade. But some definite hesitation going on here. Oh, one thing I need to remember is that my exit order is live. Which is not necessarily a bad thing. I just don't want it to be ultra tight here because what we're looking at, remember, we've got the breakout from the trading range. Ideally, I want to see 2 bars lower. That should fill me to the short side, should bring me back to a hard edge bounce and a retest of the breakout. But if it doesn't, then there's a good chance that the market will try to continue to rally. Maybe recover some of the overnight action. I would feel better about buying if I saw 2 bear bars here on the eagle. The hawk is just dead neutral right now. Well, actually, everything is dead neutral right now. All right, let's see if the sellers come through now on that number 2 signal. Target still the hard edge. Could try to reach a little bit further, maybe take it down here even to the primary support zone. Not as much follow through as I hoped for, but everything's been very, very slow here this morning. All right, sorry about that, folks. I was looking at the trade and I noticed that the volume was malfunctioning. As you can see, the counter trend trade unsuccessful, as many counter trend trades are. Always trickier trying to trade counter trend than with trend, but it was worth a try. Unfortunately, it was also at around that quarter to the hour mark when very often the market will throw you a bit of a sideways signal, something that's not going to have enough follow through on it. All right. Paul, good morning. Paul says, for the Raptor, what is the high probability target for the 1 and 3 signals? All right. I'll go through everything here and focus in particular on the Raptor because that was what you asked for. For the Hawk, because it's a scalping tool, we're looking for a typical scalp target, which is $50 per contract. The Falcon and the Raptor are swing targets. We're looking at the traditional swing target value, which is $100 per contract. And then with the Eagle, we're looking at a trend target of $200 per contract. So that now boils down to what is the tick value of the instrument you're trading. So I'm following the NASDAQ. So in order to make $100 on the NASDAQ, because it's $5 a tick, I would have a 20 tick target. Now what we're looking for is we're looking for a few high probability trades throughout the day. Too many traders come to the marketplace with a production line mentality, and they think to make more money, they need to trade more often. But that's not really the case. The case is to try to find the highest probability signals and then to leverage them appropriately given your account. So what that means is, let's say you're trading a $20,000 account, then based on where your stops are, in this case, I could afford, well, here, let's look at a buy. In this case, I could afford to buy one contract. If I change my stop strategy, or even if I change my stop parameters, let's say I go to a 20 tick stop, now all of a sudden I can trade 2 contracts. I can afford to trade 2 contracts with a 20 tick stop. Or if I dial down my ATR, I can also increase my market exposure without increasing my risk. My risk is still capped. That's the important part. So what that means is that as your account size grows, you can now afford to trade more and more contracts. So once again, we're not looking to trade more often, rather we're just looking to trade more contracts. So if you're able to consistently make $100 a day trading, and typically that will be 1 or 2 or sometimes 3 trades, you can earn literally as much money as you want. If you can earn $100 a day consistently, and we're going to, ignore commissions and fees and whatnot for the moment, but let's say, one $100 trade or two $50 trades, that's $20,000 a year using single contracts. If you are in a position to trade 2 contracts, well, now that's $40,000 a year. If you can trade 3 contracts, that's $60,000. 5 contracts, $100,000, and so on. And that's all from just that base point of trading for $100 a day. So with that in mind, that tends to make you a little bit more particular about the signals you need to take. Because now we're not looking to capitalize on every single signal, right? Like I said, this isn't a production line anymore. We're looking for the highest probability signals, the best setups, and admittedly, sometimes we may have to wait for an hour, maybe even 2, rarely more than 2 hours though, to make our profit objective. So take, for instance, the trade that I tried here this morning. Yes, it was a high probability signal. It was our number 2 signal. But we know that counter trend signals tend to be a little bit riskier anyway. The nice thing about a counter trend signal is the stop loss. You know immediately where to place your stop loss. You know immediately when you're wrong because the market will, take out, in this case, the high and continue higher. So for counter trend trades, which I normally recommend you do with single contracts anyhow, for counter trend trades, because they're riskier, you can usually contain your risk amount a little bit better. They're usually a little bit tighter, especially if you're just trading single contracts. It's not going to cost you that much to be wrong, but you're trading off the probabilities for the smaller stop loss. The easiest way to try to qualify your trades, which trades are going to be the better trades, is to consider trend. If the market looks like it has a trend emerging, then try to stay with the trend as much as possible. You can see here this number 3 signal. I would have been much better off taking the number 3 signal than trying the number 2 signal. Not because I know in hindsight the number 3 signal worked out, but rather the number 3 signal is with trend. Right? We have the number 1 signal, we have a market going sideways, and now we come back with another signal to buy, a continuation signal. Oh, excuse me, folks. Telemarketer, just a moment here. Sorry about that. Okay, so here we have a trend that seems to be established. We have a market that's going sideways, and now we have a number 3 signal to continue the trend. So just the fact here that we have an emerging trend makes the with trend signal much more reliable, a much higher probability signal. And if we were just looking for our $100 trade, there it is right there, right? The market goes up, hits our profit objective. In this case, actually goes a little bit further. But there we go. We would have made our trade on the day, and essentially our trade or our day could be done. It's not in trading more often. It's in finding those opportunities that are going to pay off. And that is the tricky part. That is the hard part for most traders. And it's not just me saying that. There's, people in the trading room who have tried it. They can testify that it works. It's not just me saying, hey, this is what you should do. And for those times where, the trade does not work out, like my shorting attempt this morning, you need to have an ouch point. You need to have a loss limit on your day where you decide to stop trading. Typically 5% of your trading capital is usually a pretty good time to pull the plug if you have a 5% drawdown on the day, depending, of course, on your account size, right? I don't think I'd recommend a 5% drawdown if you're trading a $200,000 account. I don't think you need to go that high. It's a bit of a sliding scale, of course. The smaller your account, unfortunately, the greater percentage of your account you need to place at risk with each trade. And then, of course, the larger your account, the smaller percentage of your account you can place at risk. But I think it's important that you have an ouch point. You have a point where you say, okay, for whatever reason, it's not working out for me today. I'm going to pack up my toys and I'm going to come back tomorrow. But in my case, because I had a losing trade there to start, I'm going to probably look at taking 2 or maybe 3 trades today to get back to even, and hopefully even post a bit of a profit. See, so what your days are going to end up looking like are something like this. Here is our TraderView account for the trading room. And you can see there's a couple of days where I finished in the red. Not terrible, but still a couple of losing days here and there. These days through here where the profits were a little bit smaller, this is where I would initially take a losing trade or two, and then I would have to try to recover. And then once I got back in the black, well, I stopped trading. These are all on single accounts, or most of these are on single accounts, by the way, or single contracts. So I'm back in the black here. I'm $100 to the good, single contracts. So I made my objective, right? I clawed my way back from whatever I did to begin with, probably like this here today. So I started my day, I have a $155 loss. So I'm probably going to be looking at 2 or maybe 3 trades to try to offset that loss and to get back into the black. It's not going to be one of these kinds of days here today. It's going to be probably something like this, a more modest day. But so long as I finish in the black, like I said, after that, it just becomes a numbers game. Yeah, like Mark says, it takes experience to figure that out, and it's something I can tell you about, but until you do it for yourself, you're not going to believe it. So I think you need to, even paper trading it is a great way to convince yourself that yes, this does work. It works better than trying to chase down a dozen signals in a day, which is very, very difficult. We're not getting much in the way of structure here this morning, are we? Let's take a look here at the Hawk scalper. Very sideways, very sideways. All right, well, speaking of trend, we now have a couple of number 3 signals, a number 2 signal. You need to be cautious as well when your signals start flip-flopping like this. I call it candy striping, but we don't want to see too many signals printing without any follow-through. The nice thing about this, however, is we do have a second push opportunity. The second push opportunity simply means we allow the signal to engage, we see where it flinches, and then we use that bar as our signal bar. So the number 3 signal printed right here, it flinched off of this bar right here. So I could look to buy on a second push higher if we get above the high of this bar. See, now here we go with yet another number 2 signal. That's not what I want to see. I don't want to see it flip-flopping so much. In fact, the fact that we come back with a number 2 signal even opens up the possibility of the market breaking down now. Is this the end of the bull run? Are we going to see the market continue lower? So now we've got the market a little bit pinched. We've got a second push on a number 3 signal. We've got a second push on a number 2 signal. So I'm going to look to short below here. I'm going to look to buy above here. See how this bar reacted? It went higher after producing the number 2 signal. So that's the one I want to short below. And I'm allowing the trade calculator to cap my risk so I don't risk more than I can afford to lose. All right, so now we're getting close to the buy side. I have to admit, buying it makes me a little bit nervous just because the market spent so much time going sideways. And we're right in the middle of this very tiny trading range. All right. I've got my order in there now. I've got my exit order, which will act as my short order if the market decides to head lower. And I've got now the second push on the number 3 and the second push on the number 2 signal. Still very, not the ideal setup because of this sideways trading range that we find ourselves in. All right, there we go. I may try to stretch this a little bit, see if we can't get back closer to 7,100, try to recover my earlier loss and perhaps post a profit. If we can get above the median line that you see right here, that's that gold line. Come on, get over that median line already. We're trading in slow motion. The market's taking its time. Come on, almost there. Get over. Oh my. I don't know what the market's waiting on here this morning, but not a lot of upward momentum. Okay, we're working a first micro macro cross signal here in the hawk. That's encouraging. All right, come on. There we go. Got a little bit of an uptick. Oh, wow. That median line really holding the market down. Well, the lack of follow through is just amazing here this morning. In a way, if you consider this to be the sideways trading range, we're looking at a breakout and a retest. Come on, buyers. Wow. Just when you think it's going to have some giddy up to it. If I can get a couple bull bars in my favor, I should have actually rolled to break even off of this little rally here, but I didn't. Oh no. Oh no. There we go. There's a little bit of buying off of that first hard edge. Come on, get up there. There is a tendency, if the market is lacking upward momentum, for it to stall. They say you have to always feed a bull market, but a bear market will fall under its own weight. Come on. They're trying. So what we're witnessing is a breakout of this little trading zone, a retest, trying to encourage more buyers now after the breakout. Next obstacle will be the median line again and this high. Ideally now my stop is in the ideal spot because I'm 2 swings back. When in doubt, that's always a good place to place your stops. Come on. Here we go. Wow. All right, I'm going to roll my stops a little bit here. Almost not quite halfways of this last little run, but we're getting to the point where if the buyers can't pull this together, then I'm going to look at taking an early exit. Is this thing on? My goodness, I don't think I've ever seen the market quite this slow. Not for this time of the year, anyway. Isn't trading exciting? Wow. Okay, well, that median line refuses to budge. And here we have a very nice test of the extreme and now a number 2 signal. I'm going to leave my stop where it is. I could put my stop below here, but the chances are pretty good that the market will try to break this by a tick or two. And that might encourage the buyers. Obviously, I would much rather see the buyers pick it up before they broke it. Okay, there they go. They broke it. And are they going to give it to me? No, I don't think so. There should have been a bullish reaction already. They're a little bit slow. And so I'm likely going to get tagged on this one. Paul's asking, this is a big resistance level on the daily, isn't it? So it's probably going to take a lot of momentum to clear it. You're probably right. Here's the daily now. And you can see the struggle getting above Friday's highs, which were 70.95. Well, we're not quite there, but certainly the market having some difficulties. Even looking at your daily chart, you can see there was bullish momentum and then it starts to slow. Bullish momentum starts to slow. A lot of sideways trading recently. Yeah. They were just taking far too long to do anything with that. And, you know, what doesn't go up is probably going to try to come down. Back to the hard edge now. And here we are in slow motion again. All right, back to the hard edge here. The hawk getting a little bit bearish. I don't know if I want to attempt a short, but you know, the hard edge, we usually see a reaction to the hard edge. We'll see. If I get a reaction, I could be more inclined to try to sell it. Well, not much of a second push. You know, we're just too neutral. Obviously, I'm looking for another opportunity, but I can't get a clear signal here. I'm tempted to short it, but I could just as easily see the market try to recover the uptrend. Right after I sell, I can see the market in the hard edge turn and try to head higher from here. This is where trading gets tricky, you know, having the patience to wait it out, even if it means missing a move. All right, here's that hard edge bounce. I have to admit that the market is much slower than it usually is. Okay, hard edge bounce. Yeah, Les says today's range is only 171 ticks. That is small. Well, I'm just showing you this because there's nothing else going on. It is a feasible trade. We're going to extend our trading range a little bit to include this here. When you see a breakout of a trading range, we always have the whole test retest thing going on. So here's the breakout, here's the test, or the retest, I should say, of the breakout. And now we're going to be looking for the market to continue either higher or lower. What this does is it kind of puts the market in a little bit of a bind. So we could just throw our just in case order to sell below here. We could throw a just in case order to buy up here. And now we essentially just wait it out. Chances are that the market should try to rally from here. So if you wanted, you could look at this hard edge bounce, this red bar buy, and try to take the market long above there. We certainly have enough to realize a profit as the market will likely retest this zone here. We're probably working a hard edge bounce in the Raptor as well. It didn't print as a hard edge bounce. It did not print as a number 3 because the clouds were out of sync, but that is what's going on. Um, Mark's asking, yep, the daily range is definitely shrinking. In your professional opinion, what does that tell us? Hold on a second here while I grab the magic 8-ball. And it comes up, cannot predict now. How, the magic 8-ball has all the answers. Um, what it tells you, of course, is that the volatility has left the market. The volatility will come back to the market, but right now, there's just no volatility. All right, well, here we go. We're getting a little bit of a turn that might enable us to tighten up on this buy signal. I think I will wait for a little added confirmation and look for another bearish bar here on the eagle before I pull my entry order down. The market really just likes it where it is. You know, the market is happy trading around 70.70. Yeah, Mark says this feels like July, August trading, and that's the truth. I'm not sure where all the volatility has gone. Well, gang, we're closing in on the top of the hour, which means we're going to be getting closer to the lunch hour break, which means things could slow down even more if possible. Although, you know, that said, because things have been so slow this morning, it may actually pick up a little bit in the afternoon. We'll stay with them here for a few minutes more. We're going to get a trend change signal here in the Falcon. And then, of course, we have the number 3 signal here in the Raptor. All right, let's take a look here at potentially tightening up this order. So we'll do a second push on that. Yeah, I would agree with you, Mark. Mark says I could see that area around 70.50 being a strong resistance area from the left on a daily chart. We've been there for a week now. A strong area for sure. Yeah, overall, the market not really willing to move that far off of the mark. We do have a green bar sell here on the hawk, which we can buy the failure of. This is the counter trend signal for the hawk scalper. But even here on the hawk, it doesn't happen often, but you get one of these days. One of those days where the market's just not cooperating. Here was a first micro macro cross on the hawk. Very, very close. I'm not sure if we hit the profit objective there or not, but let's say it did not work out. Here we have the first micro macro cross lower. Okay, that one worked out. But overall, the market really just struggling to get anything going on. Everything happened right out of the open. And of course, that's always the danger, is that you get the move early and then the market falls flat. That's almost where we're at right now. All right, gang. I think we'll button up shop here for the morning, and we will try it again tomorrow. And I don't know, before we go, let's check the reports calendar, see if there's anything report-wise coming up. Nothing for today. Tomorrow, oh, there's the holdup. FOMC minutes. That's why the market is so dead today. Tomorrow, an FOMC day. All right, well, that settles that. You may as well pack up your toys and go do something else, because the market is probably going to stay pretty dull for the rest of the day. Obviously, the trader's not quite clear on what is going to come out of those FOMC reports. All right, I'll catch you tomorrow. We'll see you then. Bye for now.